A lot of these co-hosts are also trained by other co-hosts who also don't have that much experience. They've never dealt with a mainline issue. Market range is anywhere I've seen as low as 10% of the gross, all the way up to like what Marriott charges, which I think is like 40% of the gross. Back during COVID was this phenomenon called revenge travel. And it was basically people that couldn't travel for a while, and then they got all their groups together and said, hey guys, let's save up and let's just go crazy.
And we walked in and went, whoa, how much is this to rent? Because I want to rent it. And he's like, it's like 17 grand a month. And I'm like, I would just come for a month. Almost the same price as going to the hotel. The hotel was $3,500 a week for each family. And now you're at the same price as renting that mansion for a month. Welcome to the Captain Curt Show. I'm your host, Curt Marker, where we talk business, real estate, and building wealth that anybody can achieve a financial freedom lifestyle. All right, welcome to this week's episode of the Captain Curt Show. I've got Evan Rundle here, the founder of Noviq. He is a Airbnb co-host, a boutique hotel operator, and he is currently raising money for a deal in San Diego. So looking forward to deep diving and into hosting and a couple new things that we just discussed before the show. So welcome to the show.
Thanks for having me.
Yeah, thanks for driving up. I know we've been kind of talking for a little bit, trying to connect, and I operate one Airbnb nowadays. I've sold all of the properties, and it's a personal house of mine. It's in Lake Havasu, and I hardly like to Airbnb it because of the complaints and certain things that sometimes Airbnb gets a bad rap, right? I'm a really good host, I believe, because it's my personal house. It is not a rental. I actually care about it, and I just had a guest that was just a pain in my butt, and I literally was so tired of their complaints, and it was like bullcrap complaints. And I just said, I'm just going to refund you because I'm tired of getting, they're like, you need to FaceTime me right now. The fridge is dirty, which I'm like, I just did a deep clean for $600. Yeah. How is the fridge dirty? Right. It's like behind the freezer drawer, there was a little bit of mold there. Like, we're talking a teeny amount. It's like, I'm like, I bring my kids there. It's not a dirty, so I just finally said, I'm just going to refund your stay, right? Yeah. Because I'm on an airplane going to Italy. I'm like, I just don't care right now. Right. Will this make you stop texting me? And then, so I refunded it. So and I wanted them not to break my house. You never know, right? Even with their 5-star stays. Yeah. So they leave, and they leave the house kind of a mess. The cleaner is like, I refunded these people because they're a pain in my butt. I don't care about $1,300 as much as I want my house. So I refund them the money minus the cleaning stay, $200, right? 3-bedroom, 2-bath house, all this. And then they go, wait, we were under the impression you're going to refund the whole thing. I go, here's a couple photos of the sink condition. You left sink dishes all over the sink. Somebody's got to pay to make the beds and do all this. You guys left the house kind of a mess. Yeah. Anyway, so I'm just like, Airbnb is great. I was making so much money during COVID. It was crazy. But I know Airbnb has shifted. But for me personally, it's cool talking to Airbnb hosts that really run it as a business. More mine is like an offset of income. So even though I feel like I run it professionally, I'm still tired of dealing with some of that. You know what I mean? Yeah. And I think that's why people have asked me, like, hey, do you want me to run it for you? And I go, yes, I do. But because of taxes, I cannot do that. I have to operate 10 hours a month to offset my W-2 income. So you have to be involved in the project, you know? So I'm like, I have to self-manage. Yeah. But why do you think it is that someone like me that's a very busy, successful person with other businesses or a job really should use a co-host if they do short-term rentals?
I mean, you answered the question within the question, right? And well said. I can totally identify. You said so many things that I want to kind of go back to for a moment. Because I too started just as a side hustle hosting one unit, right? I was in LA. This was in 2015. And I was just doing it to make money. And I put everything into that. All your care, all your time, hand-holding the guests, going above and beyond. And man, you get jaded real quick in humanity by dealing with these guests one-on-one all the time, right? And so I was getting burnt out, and I had to make a decision. I could either scale it and hire some people and build an infrastructure, or quit. And that's exactly what I did. I scaled it so that I wasn't the person dealing with all the minutia and all the drama. And I built an infrastructure so where I could manage the managers, but not be involved in the day-to-day with the guests. And to answer your question, I think that's what most people need. They want their time back and they want to make more money. And we can accomplish both of those things as a co-host. The other thing is you don't know what you don't know, right? So I bet you right now, if I ask you a series of questions, I could probably find some pain points and some holes where you're leaving money on the table. Dynamic pricing is not something that most singular hosts know about or know how to do well, right? Also, there's economies of scale. So I know how to save more money on the cleanings, the linens, the toiletries, the supplies, right? You're probably paying a third-party cleaner and they're profiting off of that. I do all my cleanings in-house. So there's a number of reasons why you would want a co-host to come in, but the main two really is just more time and more money.
Yeah, and I think you hit the nail on the head. I've gone through several cleaners. I have a decent one right now. But then at the same time, it's like if I have a checkout on Sunday and my house is not busy, I don't want to rent it, full time. I'm good with it covering the cost because I already made a lot of money on it. I have no money into the house. It's a good. So I'd rather the house stay maintained well and it doesn't need to be full all the time, right? And I want to be able to go use it once in a while. So long story short, if I have a checkout on Sunday, I tell my cleaner, hey, please be there Monday morning. I don't need you to do it like Sunday. If you can, great. Monday morning, please be there. Put me on the schedule, right? And then it's like Monday comes around and I check my phone. They haven't checked in, using Ring doorbell or whatever. Then it's Tuesday. Now it's Wednesday. And now I'm pissed. Yeah. Because what people don't get is I can't rent the house out with a dirty house. So I have to block it on Airbnb and VRBO. That's right. And so I got a text, as an owner, I got a text the cleaner, what is going on? Half the time, it's probably depending where your cleaner is, half the time I hear some story. Right. My car broke down, my truck got towed, like blah, 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 blah. And it's because you're dealing mostly with cleaning companies that aren't professional. Yeah. There are ones out in my area and they charge double. Exactly. So I'm like, is it worth the headache? It's not always worth the headache because as long as my house is getting cleaned the next day, It should be good. But definitely if I was going to have more than that one unit, I would hire a management company that ran it all for me. But also if I had more units, I wouldn't care as much about the property because I'm not going to live in all of them. Exactly. But when I take my girlfriend and my kids to our lake house, it better be clean and in the order that we want it, Fully agree. What are some of the things, let's talk about dynamic pricing because that's a really good point that whether managers are listening or people are buying their first Airbnb is a very valuable tool because some owners, if you don't do the research, you can overprice or underprice your house. And I see it a lot. Even when I was new, as my house was starting to get booked 5 days a week, I'm like, wait, I need to increase. I have no days left. I was doing like 7 days a week. Then I learned that that's too many days. You need a day off to fix anything or whatever. So what is dynamic pricing and what are some of the apps you guys use to get the best prices?
Great question. So we were talking about airlines earlier, right? Airlines have a great model for this, and so do hotels. I think short-term rentals took a while to adapt to that because pacing is something that we study a lot, and it doesn't necessarily work the same with short-term rentals as it does hotels. Hotels deal with clusters and they deal with stacks of rooms, right? An Airbnb, your cluster is your neighbors. It's people in that market, right? So you're comparing your one house to your comp set in that market. And so we use PriceLabs, but there's a bunch of other softwares you can use beyond pricing and they're all fine. But what we do is we literally have meetings with PriceLabs where we go over and we look at our comps on a granular level and we say, hey, our house has a pool. This one does also. This is a 5-bedroom. This is a 5-bedroom. The design is similar. And we look at pacing. How much were they charging on a Tuesday in February? How much were they charging on a Saturday in July? And so we set these parameters, these customizations within PriceLabs, and then PriceLabs has AI and automation, so it's adjusting pricing constantly. But then we take it a step further. So then we manually go in after PriceLabs does its magic, and we daily adjust the pricing even more beyond that to stay competitive. So it really is a full-time job. There's people that do revenue management that make 6 figures a year for that reason.
Yeah, I mean, if you can squeeze even $10 a night, it brings your average daily rate, which is what we use in hotels. I don't know if you use that a lot.
Yeah, you can use RevPAR too is a good metric also. ADR is a good metric. So
you're basically measuring, I mean, the real goal is to measure monthly and annual income, right? Your net operating expense above expenses. But if you can imagine if you got 365 days in a year. Let's say you're renting it for 250 days a year. Yeah. But if you can even increase $5 a night or 10, and then on a holiday weekend, sometimes my prices go up $150 a night, just on Labor Day and Memorial Day and 4th of July. So it makes a large difference where, as a single owner or someone that manages themselves, if they are not fully tuned into it, meaning if they go to their 9 to 5, they better be researching on their business from 5 to 9 after, right? And so that's kind of what it takes to be really successful, in my opinion, or it's time to hire a management company.
100%. And so when I started, same way. There wasn't even really dynamic pricing back in 2015. I used to manually do it. I would go every night in my calendar and do the weekdays and the weekends. And I would do the same price. And so I thought I was doing okay. And then when I discovered dynamic pricing, it'll adjust it by dollars, like literally be like 94 or like 102 versus like 99 and 199. And there's a reason for that. So to your point, yeah, if I can squeeze that little extra juice out of every single one of those days, that's going to compound.
And if your house or your Airbnb, let's say short-term rental, is exactly like the neighbor 5 houses down, most people are going to choose it based on price. Yes. If you both have a pool, you both have ping pong, and you both have a couple amenities, they're going to go on price. So that $2 to $5 a night, it doesn't sound like a lot. They will make a decision, and you will either lose or win that $1,000 to $2,000 a week stay.
Without question. And it's not just the ADR, it's the total cost. So when we do those comps, we also look at the cleaning fee. And that's what we were talking about earlier. If I can keep my cleanings in-house and the cleaning fee is the same to my competitor, well, I can lower that by like 20, 30 bucks and I'm still making a profit on the cleanings, but then I'm converting that user to book with me.
That's a good philosophy. Like I said, I'm fairly involved in mine. I'm not trying to squeeze money, but I would like to start making some more through it. And one thing is, like, my cleaner charges me $160, right? $160. It's the cheapest around. She's been good. She's been there like 2 years. I charge Airbnb $200. So when a guest stays, my friends that stay booked direct, I go, whatever the cleaner says, I don't need to make money off my friends, right? I give them deals. They work on my house. But long story short, I charge $200. The cleaner charged me $160. The reason I do that is there's multiple times where the guests will like spill chocolate M&Ms on my couch and she's got to use like a steam cleaner and it works, but she'll charge me like an extra $20. Yeah. Well, instead of going and fighting Airbnb, and they're not great about getting me photos. So instead of fighting Airbnb over $20 for a cleaning stay, I just go, we're good. I'm still under my target. Right. Because I'm also not pinching pennies. But now when someone messes up my house and breaks the barbecue and it's $300, or I've had a broken bed, I've had like a couple different major things. Their dog, that I don't even allow dogs, chewed up a futon and ruined it. And I'm like, okay, here's photos, here's the replacement costs. And then I do whatever I need to do. But that's one avenue for my cleaning fee. But I like the idea of even maybe I've dropped the cleaning fee $10 and now it's $190 instead of $200.
Exactly. And the other reason that co-hosts are good is because we can actually go after those damages too. The amount of time it takes for you to do that. You're such a busy man. You're flying. You're doing all these things. For you to call Airbnb, get on the phone, it takes an hour to get somebody on there. Then it's a 72-hour process. You got to show the damage photos. It's too much. It's not worth your time. But with a system and VAs and people that are doing that, we'll fight over a $300 damage claim until we win it. And that money goes to the owner. So at scale and with that infrastructure, it is worth it.
Yeah, I like that idea. You hit it on the head. It's not worth my $20. Where when I was younger or whatever, $20 like, oh, that's kind of a lot of money right now. I'm barely paying rent, right? But now when you start making more money, my time's worth so much more valuable. Like, I don't even care about a couple $100. I should. Right. I may try and save a couple $100 here and there, but I'm like, overall, I'm not going to make a phone call to get $20 back from a steam cleaning thing. Exactly. You know?
Exactly. And then imagine that at scale too, right? So like you said, you're doing this because there's tax benefits. You like to travel there. It gives you a home. I'm sure there's all sorts of stuff you're doing with depreciation, right? But there's people that this is everything to them. There's people that they put all their money, all their time, all their investment in this one Airbnb, and it makes a huge difference for them.
If you're a busy professional making more than $200,000 per year and you want to put your money to work, come partner with us at Captain Capital. We buy and develop recession-proof industrial warehouse, and we do all the hard work so that you don't have to. Go to CaptainCapital.com, book a call with the team, sponsor limited, and don't miss out on our next opportunity.
So with my company, we're able to fight for every single dollar that they don't even know that they're losing. You don't know what you don't know. And most, especially hobby hosts are dead. They're just dying. You need to do it as a business. You need to have professional photos, professional design, and you need to have somebody that knows how to make you the most money because, again, you're just going to leave a ton of money on the table.
So if someone is listening to this show and they're like, I want to either get a short-term rental or I have one or two, and it's just like breaking even and I'm banging my head against the wall, what can they do to interview a property management company or co-host?
Great question. So you want to make sure a couple of different things for that co-host. And listen, no shade to the new co-hosts that are out there. I fully respect the hustle, but you got to find somebody that has experience. Because the problem is a lot of these co-hosts are also trained by other co-hosts who also don't have that much experience, right? So they've never dealt with a mainline issue or a roofing issue or something crazy and bizarre that would be a new experience for them. You don't want them to learn on your property. So the most important thing in my experience is experience. That's number one. Number two is what are their systems, right? You want to understand what are they doing for guest communication? What's their response rate like? We get back to guests no matter what within like 20 minutes, 20, 30 minutes at the most, right? And we monitor that. We check our team and say, hey, why did it take you 32 minutes to get back to this guest? You know what I mean? So there's all these things you have to check. Check their listings. Look for Superhost, look for 5-star reviews, look for guest favorites, see how many reviews they have. A lot of the times you'll see somebody that has a guest favorite, but there's only 6 reviews. It's like, well, why is that? Well, probably because they had to build a new listing or start over. So you really want to do your due diligence and then get referrals. Talk to other clients that they have and ask them, like, what's your experience been like with them? What's their turnaround time to you? Because at the end of the day, you're the client. The owner is the client, even more so than the guest.
Yeah, and the owner is going to appreciate their property more and appreciate your service more than the guest, right? Sure. Because they're looking at you like, manage my property, show me what you're doing to help me. They want to get the benefit for the fee they're paying, right? So what is an average fee for co-hosting? Like an owner like myself, let's say I hired your company. What is like about an average ballpark fee?
Yeah, so that's $1 million question, and it changes based on the client, based on the market, the property type, and the quantity, right? So if you gave me a single family home in Fort Lauderdale, Florida versus a multifamily building here in California, my fee would be vastly different, right? So the market range is anywhere I've seen as low as 10% of the gross, all the way up to like what Marriott charges, which I think is like 40% of the gross. So it's gonna live in that area. We're definitely on the lower side of that, but I won't give you an exact number.
Yeah, and it makes sense, and I agree. I think a lot of the people that I know that co-host are mostly doing homes in vacation destinations. Sure. So that I know I heard somewhere in the 20 to 30%, you know, depending on where they wanted to be. And I think as a business, it depends on how much that property's bringing in as well. So I know there's multiple variables, but at least that gives people a heads up on what it may be. A couple more questions on short-term rental, and then we'll move on. Now, how do you... what's your playbook for evaluating a new market for like a short-term rental?
Let's go. This is where I nerd out. This is my favorite part of this process. So there's so many things you want to look at. First thing I'll do is I'll go on Zillow and I'll go on Airbnb. Those are my 2 Bibles, right? And I'll look at, so let's take a 3-bedroom single family home here in San Diego. Let's just start with that. So the first thing I'll do is go to that zip code and I'll see how many more are either on Zillow or on Airbnb. And that'll give me an idea of the total number of competitors that are in that space, right? And then I'll go to the top 10 performers as far as revenue on Airbnb, and I'll see what they're making. And then I'll see what they have. And we use AI for this, and I have a team for this, and we underwrite. So what amenities? Pool, pickleball court, hot tub, sauna, pergola, whatever it is, right? And I'll stack them next to each other, and then I'll decide, hey, not only how can I match them, but how can I one-up them, right? I noticed none of these have a sauna. Great, red light sauna, let's add that. None of them have a fire pit. Great, let's add that. Their photos are dated and they don't have great design. Great, let's add that. And so you wanna just find ways to beat your competitors. Another thing I'll do is I'll go on Zillow as well, and I'll see what's the market rent for a property like that. Because when I'm pitching owners, I want to make sure they're going to net at least 20 to 30% above that market rent, or I'm not even going to bother. Because think about it, you're going to invest 80 to 100K in design and furniture and amenities and all that, right? You want to break even on that relatively quickly. if you could make $5,000 on the market and I'm only making you 5,100 or 5,200 as an Airbnb, it's not worth it. But if I can make you 6, 7, 8,000 on that, now it's worth it. Does that make sense?
Yeah, it definitely does. And it's interesting because markets do change. Yes. I'd say annually, right? I mean, if you're in like a market like San Diego, I don't think it's really going to change because the weather here and tourism has always been strong here. Even in a bad economy, San Diego stays strong. Yeah. Whether it's the beach, SeaWorld, Legoland, right. Disneyland's nearby. But if you're in a market like, for example, Lake Havasu, that was a market that was dead, then got really hot for COVID, and now it's kind of back to average. So I was on my little 3-bedroom, 2-bath house that's very low expense. I was bringing in like $13,000 a month, where now I'm like, I'm good at 3 or 4. And it's just my, I think even if I made 6, would I be happy? But it'd be a lot of work. Yeah. So for me, the markets change, and so what are a couple of your top markets that you're looking at right now that maybe a client's going to buy or you're going to buy? Like, what are some hot markets right now that are going up?
Great question. When I look at a market, I want 3, 4, 5 reasons why people are going there. So I typically avoid the strictly tourism markets. I like to find things like, for example, Miami, right? There's a million things going on in Miami other than just tourism, right? Here in San Diego, so much going on other than just tourism, right? And coastal, I think, is a big thing. People are always going to want to be by the water. People are always going to want to have that kind of experience. So in my opinion, coastal and downtown urban, those are my 2 favorite markets.
I love coastal too. And I think no matter where you live in the US, I think most people like either going to the beach or at least seeing it. So if they're not a beach person and they don't want to go sit in the sand, right. They will like to go to a restaurant overlooking the water. That could be a lake or a beach, but I feel like even though I've grown up here in Carlsbad on the beach, I still like to go to Hawaii or Cabo, or we are literally going to beaches or lakes. Yeah. But even a lake, it's like, let's go to South Lake Tahoe where there's a beach on the water. And so I feel like even if you live in Iowa, they're trying to go to Galveston, Texas, or Florida, or Destin, or wherever it may be. So I think anywhere coastal, probably even in a cold area like Washington, would still do pretty well. Yes. It may be more seasonal there. I don't think there's a big season in San Diego. Right. I know there's multiple of our friends have Airbnbs here, and they just love them, and they stay booked almost year round.
Almost year round. And even in the slow season, we still have an 80 to 90% occupancy rate. Obviously, we have to drop our ADR, but we take advantage of midterm rentals too. And this is a big thing that a lot of co-hosts, and again, why do you need a co-host? Is because we know how to stack the midterm rental listing with the short-term rental listing and to let them compete with each other. So I know what my minimum nut to make for the owner is in January. And if I can set the midterm rental listing just enough higher that my commission gets paid and they're getting their nut covered, why wouldn't I do that? And so that way in the slow season, you're still covering their baseline with midterm rentals and then taking advantage of the upside with short-term rentals.
And I'd call that a win. I mean, there's plenty, like for me in my Arizona house, I rent it out to what they call snowbirds in the winter. Yeah. So they usually come mid-October to early November, and they're gone in like March to April. It's a great way where I still profit, not a lot, but it's still a profit that helps offset some of the summer costs. Exactly. And like I said before, I run mine a little bit differently because I have personal things in the house, and I kind of vet the renter very well. I'm not focused on the money like I was when I bought it. Right. When I bought it, it was like, this is a business. Also, like you pointed out earlier, some people, that's everything I had I put into that first house, right? And that was my first Airbnb, and that was everything. Because I actually took a HELOC on a duplex that I owned, and people are like, you're crazy, that's so risky. And then I go, no, I know what I'm doing. I've been shopping for a house in that market for 3 to 4 years when I finally bought it, right? And it worked. It worked really well. I had a HELOC of $50,000. I put $17,000 down, which is 3.5%. It was a permanent residence. I moved to Arizona during COVID, which is awesome, right? And then all of a sudden it just took off. So it worked out well, but I took the risk. And long story short, it's so interesting to me where if someone invests, like you said, even $80,000 to $100,000, right? And that's kind of what I invested after I remodeled the house and then bought furniture for it, even used furniture. I'm kind of frugal. Sure. So I had no problem buying used furniture. I think I bought new mattresses. I think the TVs I bought were new, Man, the couch, I bought like a $2,000 couch for $300 that was perfectly clean, and it's still there today. So it's like you can furnish these things even through a professional. Amazon's got some great products for fairly cheap. And you can also buy and furnish, make some money, and then change out furniture and start upgrading, right? And I know for me, amenities are a positive, and I'm trying to put more into my limited space that I have. But I've noticed in the market that the luxury rentals or the more amenities are what are bringing more income or revenue, 100%. Because I feel like there's more groups that want to travel and hang out together.
So let's nerd out on that for a minute. I couldn't have said it better myself. What we saw back during COVID was this phenomenon called revenge travel. And it was basically people that couldn't travel for a while, and then they got all their groups together and said, hey guys, let's save up and let's just go crazy. And they did all this domestic travel, this group travel. Well, then when COVID died away, that business model did not. In fact, if anything, it's still continuing to rise. So what we're doing, my company is doing, not just co-hosting, but also buying and developing these super Airbnbs and hotels, but the hotels that have larger doors inside of them so we can cater to those 6 to 12 group travelers, because that's not going anywhere. And so if you think about it, if a family's coming to San Diego, 30 million visitors a year coming here, how many of those visitors are families or people that are 6 to more? And there's not enough accommodations for them.
Yeah, and I agree. And even like when we go to Maui, we're doing like an annual Hawaii trip we just implemented this year, and we all stayed at hotels. It was great, But now it's like we go with, we're inviting more friends and families. And now we're starting to look at like, hey, this probably makes more sense than 4 of us buying 4 hotel rooms at a Westin that are $800 a night. Exactly. Let's put that money together. And we went and saw a friend was staying in Maui, and literally I call it a mansion. Yeah. But it was a $5 million house up on the hill, which like 280 degrees of ocean view probably. And we walked in and went, whoa, how much is this to rent? Because I want to rent it. And he's like, it's like $17,000 a month. And I'm like, I would just come for a month. I really want to go for a month. Like you said, though, it's got a pool, it's got a hot tub. I mean, it's every bed had ocean views upon waking up. So it's almost the same price as going to the hotel. Mm-hmm. The hotel was $3,500 a week for each family, and now you're at the same price as renting that mansion for a month. 100%. It had all these amenities that you were talking about, which is great.
100%. And you have more privacy. You come and go as you please. You have parking. The amenities are in there. You don't have to share them with other people, right? So even at a hotel, they have those things, but you're in a pool with, 100 other people, a gym with 100 other people. These places have their own amenities private to you. People are willing to pay a premium for that.
Yeah, and it's something I'm probably going to try and rent that exact Maui house next year for literally 4 weeks because they have 30-day rental minimums. And I'm like, they just bring different friends over, and we're going for a month, but we'll pay $10,000. Somebody else throw in a couple grand here and there. But it's like, it was such a different experience in the hotel. Now, as someone with little kids, we also like hotels where the waiter will bring us a drink or whatever, lunch and stuff right to the seat. So there's a time and place for both, I think. But also, it's like, I'm not always going to go travel and rent a big mansion with multiple friends. Sometimes I may want to go with just my kids and the girlfriend, So there's a time and a place for boutique hotels and hotels as well. And I really like the boutique hotel model for reasons that you said. Some of them are smaller and they have more amenities or the same amenities with less crowds. Yep. And you also, in my opinion, you get a little more control as a tenant. Meaning less babysitting, less like people checking, like double checking at the Westin in Maui. They're like, where's your wristband? Where's your wristband? It's like, mine broke, but I am a guest here. Right. And then we had friends come over to the pool with their kids that weren't staying there. And it was like, they kicked them out. Yeah. And I'm like, well, come on, man. They're just, it's not like we're stealing the water. Yeah. So, I get when people are rowdy and doing crazy stuff and get drunk, get them out of there. That's what we pay for. But so there's a big difference between a hotel space and then a luxury home. But it makes me kind of consider, I own some dirt in Oceanside next to my house that we're building an ADU on my house. But I really want to maybe look at the numbers on building a house sooner than later on my land there because I'm a mile from the beach, real close access to freeway, but maybe I should build that house and design it for a luxury Airbnb that later on stays in my family, and that it's something that I probably need to look at because I know coastal is really good too.
Huge. Coastal's huge, especially if you can get amenities close to coastal. And another thing you can do is like, so let's say you have those ADU plans, they're ready to go, the permits and all that. Well, you don't have to choose either or. You can make that an Airbnb, get all those amenities, get it locked in, and then still build the ADU. You can do it in a way where you can actually have both. We've seen that work as well.
Yeah, it's quite interesting. Like, I want to build another house in Lake Havasu because I want to spend a lot of retirement time there. So I really want to resort. And why I say that is I have a 3-bedroom, 2-bath, and it's great for now. But I love hosting, I wouldn't even say events. I love hosting family, right, and friends. So if I bring 3 or 4 friends out and they got kids, it's like, man, we're throwing out air mattresses. And I really envision long-term as building like 2 to 3 homes on a big acre or 2. And then having the amenities that you talk, building 1 big pool, 2 pickleball courts, like in the middle where I can go there and host family events, Thanksgiving, all these things, but also those aren't my full-time home. So now it's a luxury Airbnb. Right. Even though that market is pretty, people go there for the lake, but they also go in winter too. Yeah. The snowbirds go there. You would get a lower ADR, but they go for like the hot air balloon festival, the classic car rides. It's too hot when it's 100 degrees in the summer. Yeah. So those are kind of my 2 markets that I like. Probably because long-term, you know, my business is commercial real estate more so than short-term rentals, but I would love to own houses in my control where my kids can grow up or move into someday, where I still own it, but it offsets costs, right? And that's, I think, the game for most people. Have a job or own a business. I get a lot of phone calls, I don't know about you, when I'm raising capital. It's like, hey, I got capital. I don't know what to do with it, but it's got to go to work. And I'm done keep putting it into my business. As a business owner, I can throw all my money in my business. But at some point, I want the asset to go work for itself. Definitely. You know, and that's the big catch for people. Let's move into hotels. I know we're both into hotels. I only own one in Tennessee with Blake Daly. He operates. That's why I did the deal. I do no longer want to operate. That's a big thing. I've been an operator for 10 years. I'm worn out from it. So a lot of people, they think, you know, investing in real estate is the American dream. I do think it is. It can lead to whatever dream you have. It can lead to financial freedom. But it definitely is not passive. No. Unless you're an investor in a fund or a project like mine or yours or a hotel, I mean, unless you're just getting a check and an email monthly on an update, there's no such thing as passive about it, right?
Dude, it drives me nuts. And again, no shade to the gurus out there, but you see ads for it all the time. Oh, I'll teach you how to do Airbnb arbitrage, passive income. It's absolutely not passive income. Yeah. Unless you have a team or a system or an operator, you're still trading your time for money.
And it's a full business. So if you want to do it yourself is what we're really being clear on. If you want to do it yourself, it's a full business. 100%. And I have a good story of a good friend of mine. He invested in the hotel. He just invested in another industrial project of mine. Well, he bought 2 fourplexes, right, out of state. And I said, hey, that's how I started. It's great. Fourplexes are great. But just FYI, I sold all mine for a reason. You know, I'm all done with those. I'm done dealing with tenants. Your property management. Bingo. And guess what? He goes, these property managers suck. And I go, well, it's because you're at 4 units. Until you get a lot of units or a big multifamily, like, they're just not great. They're usually realtors in where he was. They're realtors that like know half of it and they just kind of don't care. That's what happened to him. And he goes, I'm managing the manager. I go, yes, that's correct. So there's no such thing as passive. And he goes, the managers aren't even filling the units. And then they've been vacant in this. And I go, I'm telling you, just get rid of those. Because I'm a little jealous because he's a very mellow guy where he's like, dude, I'm just going to send you my money and show me your deals. And then he goes, that sounds way easier. I go, it will be. I promise you that. And again, like, I have a team. I'm not on the phone all day. That's right. I have a CPA. I've got a property manager. We have a developer. Like, we have a team. So even though it's a business, I'm not doing it 24/7 like I was when I tried to do it myself. Couldn't agree more. So let's transition into hotels. Boutique hotels have kind of been a hot topic for 2 years, I'd say, as the Airbnbs kind of got saturated in a lot of markets. They saw the COVID slow down a little bit, where I think a lot of people bought Airbnbs and then they didn't know how to transition to either using a co-host or really optimizing. So you see a lot of them for sale. But what do you think led the real push for boutique hotels in the last couple of years?
I think it's all the things you said. So a lot of Airbnb operators got burnt out and they were self-managing and they did a poor job, no shade. So a lot of them lost some money. And then that reputation spread in both ways. It spread that Airbnb is a bust, right? And so that media traveled and people believed the hype and believed the headlines. So a lot of people either quit or are selling their property because they couldn't get the numbers they wanted to hit and because the market got saturated, right? Especially in markets that were already too much supply for the demand, okay? I like markets like San Diego where there's a huge barrier to entry in multiple ways. And so it limits the competition set, right? So anytime you asked me earlier about what markets I go into, I'm always looking for barriers to entry. That's number one. Number two is taking all that same skill set and scaling it out across several doors, but at one location, right? So what I love about boutique hotels, there's so many economies of scale, but not just for the money, but for the operations as well, right? So you have like one Wi-Fi, one power bill, one gas bill, one location that cleaners have to go to, linens can be on site, storage closets can be on site, HVAC, there's all these things you can do. And there's enough revenue, hopefully, that you can hire an operator, somebody that can do the day-to-day, and that way you're making more money, you're saving more time, and you're doing it all in one location versus trying to have 20 different Airbnbs in 20 different cities.
Yeah, and I think economies of scale is what drew me to commercial as well. Instead of just having a single family home or a duplex or fourplexes, those are all the ways I started. We were flipping, and then we realized we want to hold, so we started doing fourplexes. Then I looked at mobile home parks. And those were good until they weren't, right? And it's like, those were also a pain in the butt, but it was like, wait, I got 27 houses on one lot. This is kind of nice, you know? And then it got to be too much work. Where I love the commercial aspect, and let's see if you agree with this. This is how I explain it to investors that are newer. Like, wait, I wanted to do some Airbnbs. And they go, let me show you what I'm doing that's 10 times better, in my personal opinion, right? Everybody has a different play. But it's like, what I like about commercial compared to residential, even in an Airbnb, yes, there's a revenue and maybe that's how you can sell that property, but I think it's kind of hard to sell a house that even has good Airbnb revenue. You're selling it to an Airbnb person or a short-term rental. That house is really only worth what that neighborhood comps are worth.
So glad you're going here.
You know, so with the high interest rates right now, I believe we're in a buyer's market. Sellers aren't really sure where they're at right now. So there are some deals to be had, but sellers still think it's 2 years ago, right? So with commercial, it's literally based on the income that you bring in. And that's what I think a big push for boutique hotels came from, is that I think the majority of operators in Airbnb and short-term rental space, they started learning like, oh crap, commercial is where it's at. Not just economies of scale is a big deal, but it's like the fear of getting into commercial it is a big jump. Getting loans in commercial is way harder. Very difficult. I know myself and multiple other people learned it, I would say it the hard way. And commercial loans are very tricky, number one. But I think that was a big push. Would you agree with that? That the commercial, the appreciation and the draw, you know, to be able to control the price more, right? The value of the product.
Without question. And I'm so glad you brought that up. I didn't even get to that part of it yet. So forced appreciation, in my opinion, is like the ninth wonder of the world, right? So what was it? Buffett, he was like compounding interest is number 8. I think forced appreciation is number 9. Because to your exact point, when a lender is looking at those Airbnbs, they're still looking at single family comps. What did they sell for? What's in them? They're not really looking at the NOI. Some lenders are getting more creative, but it's not the typical, right? But with boutique hotels and commercial real estate, they look at that NOI. So if I can take a tired product that a baby boomer owns, that they haven't done updates in 30, 40, 50 years, and they're self-managing, they're living on site sometimes, right? They're living in one of the best units on site also. They're not on OTAs, so they're just like, you know, and some people do newspaper ads still, right? And if I can come in there and get seller financing sometimes, which is a great thing, right? They don't want to have a huge tax liability. So sometimes they'll sell it to you seller financing. And then I can improve that product with some TIs, get a construction loan, and then force the value to go up through a higher NOI. Now I've just sometimes even doubled the value of that property. And I'll even try to bring the cap rate down. So if you can lower the cap rate, increase the NOI, now you're forcing it in 2 different directions. And then I can get a cash out refi. I don't even have to sell it. I can continue owning and holding that asset as a cash flowing property and then reinvest that debt and I don't have to pay cap gains on that debt. So that was probably a lot of nerd speak, but those are all the reasons why commercial real estate is definitely the way to go.
And I completely agree with you, and that's why I literally only do commercial real estate now. I won't really buy another house ever again unless it's a vacation home for my family. It'll probably be building exactly what we want, but I won't be buying it because you can control commercial real estate. And even in a down market or a fear of a recession, that people are fearing a recession right now, it's all in the buy, right? Yes, we can kind of control the value later on, but you also have years of a runway to make improvements. You don't have to dump all the money into the hotel right away, right? So, or any property for that matter. You can slowly do it as income improves. But the biggest thing I think is like the fear of the recession. It's almost a better time to buy commercial and hotels because they're worried that it's going to slow down. And even if a hotel market does slow down, where travel might, it comes down to the amenities, dynamic pricing, all the same things that we talked about earlier in the show with short-term rentals. Let's break down a couple of the higher level terms and dumb it down a little bit. Because when I was newer, I didn't know what cap gains. I didn't know what some of. Let's start with seller financing. Why would a seller of a hotel want to do seller financing?
Great question. Yeah, great question. You can avoid a lot of fees, right? You can avoid those difficult lenders like we talked about earlier. We cut out all that and we go directly to that owner and say, hey, listen, I'm going to set you up with these payments every single month. It's mailbox money. You can go and retire. You've been working here for 50 years. Why don't you enjoy your earned retirement? Let me pay you on a monthly basis. You become the bank. It's going to lower the rates everywhere for me and them, and they don't have to take a huge liability up front, right? So if they were to just sell it, they have to figure something out now. They have to either reinvest that money into 1031 or they have to do something to avoid a big capital gains on that tax versus seller financing. They're not taking that whole burden up front.
And one thing I like to add to that is a great explanation because I've done a couple seller finance deals. They're tricky, but it's all about how you present and if you build a relationship. You don't just go, hey, we want to make an offer on your hotel, but it's going to be seller finance. Like, let's warm them up and build a relationship. Hey, I'm Curt. I've got 2 kids. I own another hotel. I'm trying to build a legacy, but here my credit's really good. I have this high job. So you have to build with whatever you have a connection and also their pain point. Why are you selling? I know a lady right now where she's like, my husband died. I have to sell the hotel. Problem is, it's on a lake in Idaho. It's beautiful. Her price is not even close to what it's worth. And it's like, hey, I feel for you. Your husband died a few months ago. What's going on? She's like, the hotel's empty. I don't know how to run it. Wow, that's a big pain point. So you kind of coached her like, hey, the hotel's not worth that because there's no revenue right now. But you can't tell them, you can't lowball them, or it's just rude and they're going to kick you in the face anyway. So instead of lowballing, it's like, we just walked away for a few months. And just let it go, you know? Plant the seed, and you never know if she's going to call in 6 months and go, what could you give me for it, you know? One big thing I wanted to add, long story short, was that the seller can still maintain ownership of the hotel. They just don't operate it. So they're acting like the bank, and you can negotiate the interest rate. And honestly, a lot of times it's lower than actually what the rate is at the bank right now. So it's a win-win for everybody. Yeah. And I know for us, when we do a seller finance deal, the goal is to get the revenue up from the property, right? And then bring in a bank if the terms are lower. But if the terms aren't lower, we're going to wait until the balloon is due. All the way. Yeah. So, okay, that's the seller finance. That's the benefit of seller finance. Let's talk about what NOI is and why it's so important to increase that and how we do it. Let's just use hotels as an example since we're on the topic.
So there's 2 ways that, in my experience, you increase the revenue, you decrease the overhead, right? Those are the most common ways. I'm sure there might be some others, but those are the 2 main ones. So to that earlier point, the baby boomer living on site in the manager's unit, first and foremost, immediately, hopefully they have another place to go. I'm not trying to put someone on the street, but if I can get that unit and activate it as another room, right there, I've already increased the NOI, right? It's another cash flowing unit. Another thing we do is we do the TIs, right? So new design, I like kitchens or kitchenettes. I think it differentiates you from hotels. New mattresses, to your point, if you want to try to save some money on older furniture, fine, but you really make the rooms better. You increase the rooms, nice higher ADR. If I can activate common areas on that property too, right? So some kind of shared amenity, even if it's something little, even if it's just a fire pit with some Adirondack chairs, just something that adds an amenity to that space, right? But then I can lower my overhead significantly by sharing different economies of scale on the operations side. So I mentioned VAs earlier, right? I don't have to have somebody there with a phone answering all day. I can have somebody overseas. I still have boots on the ground cleaners and boots on the ground handymen, but I don't need a 24-hour concierge or a 24-hour receptionist at the front desk. That's just not a thing anymore. It's not needed, especially on a boutique level. If I'm staying at a Four Seasons or Ritz-Carlton, absolutely I want that. But if I'm paying a lower price point and it's just a small 20 to 40 door boutique hotel, I don't need that. So those are two ways right off the bat to make it more valuable.
Now, so that will bring in more revenue to the property, right? And I agree, any business, increase the revenue, lower expenses, right? Without going too low, and then sacrificing the service or the product. So it's right. I know with our hotel, we just had a meeting yesterday about it. We're always kind of looking, and it's month to month, where we're like, wait, slower season, let's get rid of the breakfast attendant. The front desk person can kind of stock it, and then it's good for the morning. So during the busy season, nope, we need the breakfast attendant because there's so many people in bookings, right? Let's get into what is the outcome. If you increase the NOI, which is the revenue or the income of the property, how does that increase the value of the property?
Yeah, great question. So you're basically taking that number, and the lender's taking that number, and they're going to look at that and then the cap rate, and they're going to divide those things and say, hey, what's the current value of this property when I took it, and what's the value now, right? So if the cap rate doesn't change, but the NOI goes up, now the value of the property has gone up. And to my earlier point, there's even instances where you can lower the cap rate, so you're dividing it by a smaller number. So if we take like an office, that an office is vacant and dying, and it's 70% empty, right? And the cap rate is higher. Some offices are trading at like an 8 or 9 cap. If I can bring that down to a 6 cap by converting it into a hotel, now I've forced value in both directions, and that's jet fuel.
And that is a main prime reason for getting into hotels or any commercial asset where you can increase revenue. Exactly. And commercial assets range from retail, office, multifamily apartment complexes, hotels, or industrial that we're sitting in now, right? You can increase all of them, and it's almost easier, basically due to economies of scale. That's right. I think the other big thing about getting into commercial, I would bet you that most people start in residential. 100%. Most investors, unless their family's involved, or maybe they go into commercial real estate as a broker and they just stay in it. Yeah. Most people start in residential because it's easier to get a loan and it's easier to get into.
For sure, without question, which is another good reason that boutique hotels are a good call, because there's more barriers to entry. So yes, start with resi, save up the money, but know that the end goal is to get into commercial, for sure.
And you make a good point. I think if someone hasn't done a short-term rental, they're not going to know anything about a hotel. 100%. Unless you're working at a hotel currently in management, you should not go try and buy a boutique hotel by yourself.
Fully agree, which is why a fund is the way to go. And if you want truly passive income, it's even better. So rather than trying to learn all this, a decade you've been doing it, a decade I've been doing it, you find somebody like you and Blake and myself, and you say, hey, listen, I don't want to get into operations, and I don't want to deal with any of that. Here's 50, 100, 200K, whatever it is. Go let my money make some money for me.
And that's even kind of what I did with the Tremont Hotel. So I've been in business a long time. I've been a controller, as a financial advisor. I have a lot of finance, economics major, all these things. I've always been good with numbers. But I'm also understand real estate. I understand business, right? And so when I went into partnership with Blake Daly, I invested a lot of my own money, number one, because of him. I believe in him. He's on his 6th hotel, right? He's operated way more Airbnbs than me. So I interviewed him as a partner. That made me feel comfortable, and also the product was amazing. It's in the Smoky Mountains of Tennessee. It's a very large property, 130 units. It's like a real hotel, right? 3 pools. It's really barely a boutique hotel. But it's boutique because a single family ran it. They had it on booking.com, and that was it. And when we bought it, boom, 14 booking sites day one. Wow. And so The big thing is for me, I was not looking to operate anything. Yeah. I'm like, I will do a phone call or two or a few in the month. During the raise and during due diligence, I was heavily involved because there's a lot of money on the table. I think I brought in like my dad and my dad's friends and friends of mine and brought in like, $1.5 million. And that's a lot of money, especially when it's friends and my own money too, right? I put a lot of my own money on the line. So even if you want to be in real estate and you don't want phone calls every day, like I do not want to deal with guests, period, because I was already burnt out. I don't even want to deal with hotel management. So now for me, it's nice. It is more passive for me. It's as close as passive gets. Because I'm on the partner team, I literally just get the same email that every investor does, but I'm on the partner decision-making call, and it's only once a month. And we just did it, and I loved it. We had a great July, and when things were tight, and Blake had some ideas, and what I like about Blake as a partner, because he is younger, I think he's 27 or 28. I'm 43. I have more life experience. Like no one can, that's justified, right? And I've been in a lot of businesses. So what's great is the team itself takes a vote on certain financial decisions that Blake may be excited about, and they're good decisions, but I go, hey, let's wait a year. Let's just rent the wedding tent, not spend $140,000 buying one. Even to increase revenue, let's make sure that the hotel's running really well before we do that. So it's great as someone that's listening that's like, I want to own a hotel because of these reasons and appreciation. I want to go stay and visit the hotel. You should just invest in a group that does hotels so that you're not on the phone every day. Couldn't agree more. And that's exactly what we do as a team. Like we have 2 deals under contract right now for hotels. I'm not going to operate. I like the product. I will sign on the loan. I'll be one of the partners. And as long as the numbers make sense, I will bring other people in the deal. Let's talk about a deal you have right now in San Diego. I love the San Diego market. I don't own anything besides my own home here in Oceanside. I think it's because I had a little bad taste in my mouth in residential from going to court and evictions, and it's not fun in California. But in the commercial space, it's a lot easier to deal with, or the short-term rentals, right? If someone's not renting from you full time, I mean, you're getting them out. Yeah, exactly. So let's talk about your deal right now that you have in San Diego that you're raising money for. So what is the property exactly? Is it a boutique hotel or?
Yeah, great question. So it's on 5th and Broadway, right in Gaslamp. Okay, perfect location. And it's essentially 2 historic buildings. One was built in 1911, one in 1877. They've never been owned by the same person ever. And one of them was a hotel. It's called the Manhattan Hotel. And it had like bathrooms down the hall. It was 1911, Wyatt Earp times. And then in the basement, it was a speakeasy. And it was actually called the House of Ill Repute. So like there's an old like dumbwaiter where they used to lower alcohol during Prohibition and all this cool stuff. And so we're basically just bringing it back to life. We combined both buildings, did a lot tie. We did seller financing on one of them, and we raised money to buy them. And now we raise more money to do the improvements and get the construction loan. Construction loan should be closing any day now. We got a signed term sheet, but the appraisal is happening literally right now, like literally today. And then permits are already ready. So as soon as that construction loan comes in, shovel hits the dirt. And what's great about this is it takes advantage of everything we've talked about today so far. We took an asset that was super underperforming, vacant. One of them was office and got shut down during COVID, so it was like a pawn shop. So I got these buildings for very cheap. And then we're forcing all this appreciation, right? So we're able to take something, and just by adding this NOI, adding this construction loan, the value at stabilization is going to be way, way bigger than when we bought it. And all of our investors get to participate in that. And then to our earlier point, we do a cash out refi. We get to hold the asset, cashless for a while, and then we get to invest in other properties.
So when you do a cash out refi, what is your target to get how much money back for investors?
Yeah, great question. So it's a 10 pref and a 20 IRR. And so that refi is going to be a big part of that, right? Now, a lot of people, we've talked about exiting in maybe 5 to 6 years. I don't want to do that. I think that's not the right play, but whatever in the best interest of the investors, and we'll cross that bridge when we get to it.
Yeah, it sounds like a cool project. Where are you at in it? So you've already closed on it.
Closed on it. Permits are approved. Everything is literally dialed. And one of our partners is a GC, so he was able to bring a huge savings into the project. And he's done a ton here in the city. So yeah, we're ready. Like shovel's ready to go. As soon as that construction loan comes in, we're going to take a draw and we're going to start demo.
It's very cool. I think People don't understand how hard right now in this finance time, construction loans are not easy. I'll tell you this. My builder set us up with a bank in Houston. We build in Houston. We've been in that market for 5 years. I love the market. Set us up with a bank that he's done $150 million in deals with in the last, not very long, like 10 years, 5 years, whatever. He's their number one client. He's the builder and the GC. He goes, so we go to the bank. This was 12 months ago. They're like, okay, yeah, we'll approve you $4 million. They run our credits and look at all our income and all this stuff. Here's the asset, da-da-da-da-da. Well, by the time, we get permits and everything, so we start doing the loan, like doing the loan in December or January to get ready to build. They changed the board of directors at the bank. So our loan goes through, right? And we're a good loan, like 8.5% construction loan with 1 point. Great deal, right? It goes and it passes a committee. So you get approved, then you go to a committee and they vote on it, whether they want to do the deal or not. It passes the first one, and it declines on the second. So the banker calls me, hey, your loan wasn't approved. And I went, what the hell? Now what? What the hell? I got to go find a different bank? Oh my God. So my builder is furious. He calls them. He goes, we're their biggest client. We're so pissed. This is they're the ones building it, and they're the experts, right? Like, it's my first deal in this specific class. So long story short, you don't have control even when a bank gives you a term sheet. It doesn't matter. The appraisal came back not as great, but it was, then we learned the appraiser didn't know what the hell they were doing. So the builder's like, we got to get a different appraiser. The appraiser called us and was like, looking at office buildings. These are not office buildings. Yep. And so we went to another bank, right? New appraisal. Accurate appraisal. Because they were better at it. And it's like, good, this is a good appraisal. It's not even where we wanted it, but it was totally good. Totally good. Like, we're good with that. We can get the loan, and we're gonna make way more. But the second bank, and we're like, look, this is just what happened at First Financial. We are not going to go through 90 days of banking again, or we're going to go private money. We go through the whole process again. They're like, yep, this looks good. We'll do this. We're going to not do all of it. You guys bring more cash. No problem. We'll bring 200 grand more cash. No problem. They deny us. So I'm talking 9 months, and we're talking like 8 all day long. Hey, give me this document. Give me this document. Give me this. And we're like, we don't want to go through this. Just give us, do you guys think you're going to approve it? They're like, oh, no, we're going to give it. They denied us. We end up having to go private money. There's no other way to do it. So way more money, 11.5%, 3.25 points. And for listeners, on a $4 million loan, 1 point in the bank is 40 grand. 3.25% points is a whole nother level. It's like 137 grand just in a loan fee. You just give it to the bank, not counting the interest. So we underwrite so conservatively, it literally is not changing the returns. But as our first project, I wanted my returns way up here. And they're still going to be good. Like, they're still really good. But it's like, I hope we have a second deal under contract right now, and it'll close in, say, 5 months. I'm hoping that we'll be able to get regular bank underwriting. We should, as long as we sell a bunch of these units pre-sale. But that's just an experience that I've had. Commercial banking is very hard. And you have to stay on top of them, and we have, multiple of us have. And they use everybody's experience and all that. Commercial is wild when it comes to that. But I'd love to go check that project out sometime. Yeah, it'd be really cool. Let's dive into, so that's a lot of real estate. Sounds like we both know our lane we want to be in. As much as I love hotels, I never want to operate them. I would always just partner with someone like Blake, who I like a lot and trust. I found my lane, right? So besides real estate, what are things you like to do just in life in general? I know you and a friend host meetups, I think I see in San Diego.
Yep, we've done a couple of those. Shout out to Andrew Greer and David Hussein. We've done a couple of meetups together. But I'm similar to one of your previous guests. I started a podcast, and I'm passionate about motivating entrepreneurs in general, right? So real estate, I've been an entrepreneur my whole life, right? I mean, I bake sales as a little kid, you name it, I've done it. And I've been a singer. I was a professional singer. I toured. I've done some big shows with some big names. I was an actor. I was a teacher. I had my own piano teaching academy, all these things. And what I've come to realize later in life is that and I'm later in life, I'm in my 40s, but is that I've always been an entrepreneur kind of showing up as these other things, right? And Airbnb and boutique hotels is a great vehicle. It was a great matching of all of my skill sets where it lined up and I could be creative and I could be a data-driven nerd and I could do all these things and provide value, but it's not the be-all, end-all for me. What I want to do is find a way to impact as many people as possible, help and inspire as many people as possible. And I think that content is a huge way to do that. The name of my show is called The Alchemists. Would love for you to come on. It's with an S, not like the book. And it's interviewing people that have taken difficult situations and alchemized them in an entrepreneurial way for good, for themselves and others. And that's what I think I'm really here for. And because money, like you talked about earlier, it's great and it's awesome and you have this incredible life. But if it's not for something bigger than me, what am I even doing? What's the point? So this next year, I'm really focused on just scaling that, really getting the personal brand dialed in, becoming an author. I think we talked about that as well. And just finding a way to just be way bigger than just the Airbnb and boutique hotel guy.
I think it's really cool. And I think entrepreneurs, I guess it's not as similar, but I guess you could call it a background similar, but different jobs and different roles. I'm not a singer, I'm not an actor. But I've had many different roles that led to business, whether it's captain of sports teams and college athlete and all these things. They're all tools that you do, and you take an experiment. One of my first businesses was I was a mobile detailer. And it's cool, I was a younger guy, early 20s. I bought a trailer, and I detailed luxury vehicles at offices. So it taught you, number one, you have to show up on time. You have to provide a good service, and you have to do what you say. Right? And so I think all the different jobs that I led through brought me to where I am today. And I think entrepreneurs like creating something. It definitely sounds like you with being an actor, being a singer, having a piano teaching school. Those are creating art, music, or business. That's creating a thing as well. And I think it's people like us will never stop. Yeah. And I think the big difference or the big realization I came with lately is I've been hustling my whole life really, right? But I've been grinding because I have 2 kids now since January. Let's call it COVID, really, really hard grinding. And I hit a wall 5 weeks ago. I hit a wall where I was I'm just over all of it. And you can't just quit when you got investors in this. So then I had to kind of have my brain was fried. It was weird. I hit a wall I've never hit before. I've always had a lot of energy. And then I realized I just need to take some days off. That's my girlfriend's you just need to take you never take time off. And I'm okay, I'm just going to not go to the office. And then the phone didn't ring and I'm this is kind of nice. I didn't worry about content. I didn't have any video shoots. I didn't have to think creatively. I was still working on the commercial loan and I was working on my deal, but when you have a team, there's not a lot moving parts when you're waiting on permits and the loan to come through. So I think for entrepreneurs, you can get trapped into the everyday grind, chasing money, whatever that person is. Whether it's they want fame or whatever, for me, I kind of had to take a step back and go, wait a minute, what did I do before I was a hustler? Right. And really it's wow, I surfed, I traveled the world, hung out with friends more, played golf a little bit. So now it's I'm surfing more, I got a new surfboard. Right. I went and played golf with a friend, and I actually golfed really well for not playing in 4 years because I had no pressure. I was I don't care, I have nothing to do the rest of the day. Yeah. Now, do I have things to do? Sure. But I think it's pretty important for people, and I talk about this openly now because it kind of was a reset for me. And I think every entrepreneur is going to hit a burnout at one point or another, whether they believe it or not. Oh, yeah. And people told me, man, for years, I don't know how you do it all. I'm I don't know. I just keep going. I got 2 kids. I want to show them how I work hard. And I'm still going to work hard, but I'm going to do it at a slower pace.
Yeah, sure.
Yeah,
sure. And I think there's seasons in life, right? The same thing I was doing in my 20s, I'm not going to do in my 30s, I'm not going to do in my 40s. And to your point, I can't stop creating. My brain is always going to want to find a way to improve something or grow something. So it's learning how to turn it off. It's learning to not have to always be producing. I think creating and producing are two different things. Producing is more focused on outcome and trying to solve a problem and achieve a result, versus creating is like fun. It's play, right? And getting back into that childlike nature of just having fun in what you're doing. That's actually why I retired from music. I loved music. I still do. I've been playing since I was 4 years old. But towards the end of my music career, I wasn't having fun anymore. I was worried about the producing of it, right? Like, what's it going to sound like? Who's the end listener? Is this going to sell? Is my manager going to like it? What's the fashion supposed to look like? What audience is it? Fuck all that. Like what I do now is I just write because I want to write. If I'm writing a song, I'm not thinking about who's going to listen to it. I'm just writing it because I want to write it. And it happened to me in real estate. It happened to me. That's why I grew a company, because I was burned out. I was working 7 days a week. I was doing the cleanings at one point, literally cleaning toilets, doing all the check-ins, dealing with all, and it's not worth it. Life is too short. So again, I think if you're young and you're an entrepreneur and you're listening to this, it's like, it's okay to hustle your ass off and grind and get after it for a season, but then eventually find a way that you can have some kind of equilibrium where you're not always focused on producing and get back to having fun.
Yeah, and it's something I hear. I think you said that really well, because you do have to grind to get ahead. Yes. Unless your parents give you a bunch of money to start a business, which is not very common, you have to grind to do it. We all started with zero. Yeah. That's what it takes to get ahead. Yeah. And you don't just show up and get a high-paying job out of college. I know friends that thought that was going to happen, or get their master's and they're like, "Oh yeah, I should be starting at $250,000," and then they went and got a job for 60. Yeah. Well, you have no experience. Yeah, you went to school. That gets you a little teeny bit ahead, but people have to realize the grind is good for a little bit. But I guess for me now, I'm kind of advocating a little bit more on, hey, make sure you're taking a break. And it's because I finally hit that. And don't get me wrong, I still went on vacation and I'm there as a parent, right? Like, I leave the office 3 o'clock. My kid gets out of school at 3:30. We're at family time. Yesterday, I left early. We went to Legoland Water Park. That's like the new me of balancing. Like you said, productivity is getting things done, right? Where I turned off the creative brain for a month. I love the podcast stuff because we can connect on business and things. And it's going to take an hour and a half out of our day, basically, and we're going to get content from it. So, like, I have a team that's going to do the rest. Yeah. I enjoy the relationship side, and it's hard to, like, build a relationship sitting on the phone all day trying to sell something. I don't sell anything. Right. I have real estate developments, and if listeners or people that see me doing content want to come and get involved, great. I'll have a phone call and see if it's a good fit. Not everybody's invited. It's just, that's where my business needs to go and wants to go. And I found for me, when I was trying to put out a ton of content, it felt forced. That's why I had to stop. I literally haven't shot content in a while, and a lot of what I shot, I don't even want to post. Right. So now my content is coming back to, okay, what is it that I really want to do? I want to instill people, save money, don't spend on dumb stuff, but I think you should go on vacation. But don't go buy the car that you don't need, that depreciates a ton. Go spend the week in Hawaii with the family. Spend it that way, because those memories are going to be better than a car, right? And I want people to, like, you should invest in real estate. It's changed my life. You know, it's a big deal. So for me, that's what this podcast does, is it gets information from people like you and myself and other guests out to people that will listen.
Couldn't agree more.
And I think that for me, that's my impact, is through the podcast. Or like my content now is really going to be me at my buildings and developments. I've been filming. We're about to break ground in, let's say, a week or 10 days. I hope today I find the date, and I'll be out there when we're breaking ground, when we're leveling all the trees on the property. Number one, for investors, I love doing really good video updates and things for investors because I actually love it. That's why I'm doing it. But then at the same time, my content, I'll be doing content and YouTube videos on the whole process of the project. And I don't think anybody's really doing it in industrial. So it's like, I'm going to try and be the industrial guy on YouTube. So what other things, what do you do for hobbies and things outside of, music for fun now, right? Yeah. And besides the podcast, what do you do for fun?
Definitely want to answer that, but I want to go back on something you just said, because I think it's so important. Is one of the reasons that we got connected is because you did those other seasons and you got to this season where, and I hate to say it, but no one cares until you win. And Dan Martell says that all the time. Shout out to Dan Martell. It's like you had to win first, and then you got this platform, and then you were able to impact and inspire others, which brought us together, because I see you doing the thing and I'm doing the thing. And so it's like, all right, we can do the thing together. So I would just say that to entrepreneurs out there. It's like you kind of gotta earn it. You gotta like prove yourself, and you kind of gotta get your stripes, and then you can impact more people. I think a lot of people try to start too soon, and then they get burnt out, and they're like, well, why isn't anybody listening? It's like, because you gotta get there first. You know what I mean? To your earlier point, the guy that graduated expecting a 6-figure job started with $60K a year. It's like, well, yeah, you still gotta pay your dues. So, anyways, just want to give that advice.
It's a great point that you make, because I'll tell you this about myself. Like, I'm pretty smart, but I'm also the person that's humble, and I'm never the smartest in the room. And if I am, I'm in the wrong room, right? 100%. And you can always learn. So the rooms I'm in now, like, I pay to be in most of them. And like Dan Martell's one of my favorite guys. He was a winner, and now he teaches in a very winning way. And I love it. He is a family man. I'm never going to be a coder. I'm never going to be a tech guy. It's just not my thing. I don't even love it. Even though he's a tech guy, he's talking about building a balanced life, building a business, and like productivity, creativity. I love everything that he talks about. But I agree with you. And there's some days where I wake up, and even though I'm like, man, I haven't done a lot or whatever, and then you look back, and I can sit in this podcast and talk about multiple different asset classes. I can talk about millions of dollars of losses and struggles and everything else and experience. Yeah. Where 10 years ago when I started buying my first duplex, I'm like, man, this is going to be great. And it all has been great, but it's been up and down for sure. Totally. But I would never change a thing. The only thing I would change is I would have got started investing in real estate sooner. Yep. It's the only thing.
I would say yes, and creating content sooner, because to what we were saying earlier, it's still okay to get the journey too, though, because people care about the underdog and they want to see people win. So again, like, that's still fine, capturing the journey. Like you said, you're walking your properties, you're doing all that. And I think like authenticity is this buzzword that goes around a lot, but it's true. People just want to see authentic. They want to identify. How can I understand what you did and relate that to what's going on in my life? Otherwise, we don't have anything in common. So I think it's both and. It's both of those things.
Yeah, and I love that idea. And this brings up a story, because I don't share it a ton, but I lost like over $1 million doing private loans and some of investors' money, and I paid them out with no profits. So I started over at zero about a year ago. Getting an email from your lawyer saying you lost over $1 million and we can't do nothing about it, that's pretty rough. Yeah. And so I only bring that up because a couple of my friends, my CFO included, is like, dude, I've done it before. It's happened to me. You're super smart. Everything you've learned, you're going to make that one deal. Mm-hmm. It's going to come back quicker than I'm like, it took me 8 years to save and build $1 million in the bank, right? Not just on equity. And so now he's right, where it's an idea that just came to my head about content is like, when my building is done and I make, $2.5-3 million, even though it's split with a couple investors, it's like, maybe my take home's $1 million. So going from losing $1 million on a couple loans to making $1 million in one deal. I mean, all my deals I'm looking at, it's like several $1 million wins. Because I'm doing less deals. I'm only doing 1 to 2 a year. Yep. Where before I was doing 10 to 12.
Dude, so important. And that's something, do you do traction? I think I saw it in the other room, right?
Yeah, I don't track my KPIs as much, but I like traction and a volume. And so like for me, because we're buying raw land, building industrial, my like 90-day goal was make 5 offers and get 1 under contract. Totally. I made 3 and got 1 under contract. Yeah, so I cannot make another offer for 6 months. Right. Because now for 5.5 months, I'm strictly on one deal.
Well, but the reason I asked is because one of our KPIs is we want to get the same amount of money for less amount of brain damage, right? And so at the beginning, when you're hustling and you're young, you'll take whatever deal you can get, right? Same with co-hosting, same with arbitrage, same with all these things. And now I'm being way more choosy. I'm saying no to a lot. I have clients that DM me on Airbnb, DM me on Instagram, and they're like, hey, can you help me with this? And it's like, this is a studio apartment in the middle of nowhere and you want to live in it half the year. Sorry, no thank you. I can help you. I can consult with you. So it's saying no to a lot and then finding those things that I can say yes to that's worth the time and the headache. Because if I have to spend 20 hours on a deal and it's going to make me $1 million, or 20 hours on a deal that's going to be 10 million, it's a no-brainer.
Yeah, and I think that's part of the experience and the level up. But you have to get through the bottom stuff first, because I'm the same. Now I'm like passing on, and people will send me like a mobile home park and I go, absolutely not. Right. Just, I don't even open it. I don't care because I will never buy one ever again. You know what I mean? And it's like, I am the industrial guy now. So if somebody sends me anything else, like people hit me up like, hey, I saw 3 years ago, you were buying flips in Houston. I sure was. Will you buy now? Nope. Delete me from your list, please. Like, I actually spend the time to email them to, like, please remove me from the list. I don't want to just ignore it because I still get so much spam. But I agree. You have to say no to deals. We just walked away from a deal in April, and we ate $45,000. Really, the deal looked pretty good, and it would have worked out. But literally, my business coach goes, look at your first deal that's a home run. This is like a single to a double. Why do all that work? Just wait for another home run. And he goes, I'm not saying like, what's your end goal? I go, well, it's just, this is the goal. And he goes, well, this is getting you there this much. Right. Just get rid of this one. I go, it's $45,000 loss. And he goes, sometimes you have to just do it. And we actually had to refund investors' money. They wired it in. We were about to close. And then the bank thing is a big part of it because we're like, well, I don't know if we're going to get approved at the 8.5%. If we go private money, now the deal is like going to pocket me $40,000 a year. It sounds like a lot to some, but for a massive amount of risk and work. And he goes, you're going to sign on a $6 million commercial loan, $7 million to make $40,000 a year long term. And he goes, just eat the money, learn from it, go get another home run like your first one. So now we have a home run under contract. And he was right. It's hard to walk from the money, but I think saying no is a big deal. So let's just dive into your hobbies. And then I got a last question for you, and then we'll end the show and respect everybody's time. But so what are some things you do on the free time?
So still music, man. Love it. Have a piano right in my living room. I try to play at least once a day. It's my passion. I'll do it for the rest of my life. Love to hike, avid hiker. Summer did some pretty cool stuff. Love to travel, like you said. I'm about experiences, so not the cash and prizes. I don't have like a fancy, supercar yet. I might get one day, but I'm all about traveling. I took my dad to Rome last year, for his 70th birthday, stuff like that. And I also just kind of like nerd out about stuff. I'm big into like space and science and astrophysics and all sorts of crazy stuff. Astrophysics, but yeah, like things that kind of take me out of here, right? To kind of.
And I think it gives people like that that are more like deep thinkers or have hobbies. I think it makes them more full circle. Yeah. Because they're the full person, not just only, hey, I'm just a business guy. Yeah. I know plenty of people that wake up at 5, go to bed at 10, let's just say, and they hustle the whole time. Right. No. Hormozi talks about it. Yeah. And you can respect him because he built this big thing. Sure. And if that's his life, that's great. And for me being a father, I'll tell you, my kids are the most important, not the business, none of this. You have to make money to provide. Yeah. But what I'm realizing now is like, wow, I need some me time too. Yeah, like not just the kid time. Like family time after school for sure in the morning, but it's like, ooh, during the day, mine right now is the gym, but it's getting back into surfing, getting back into the things that you love to do.
When you show up better. So like there's some non-negotiables, right? Like I work out every day, 10,000 steps a day. I'm big into biohacking. Like, we're in our 40s, so I got to do a lot to stay healthy, but that's not scratching the same itch. That's just kind of like baseline. You have to do things where there's no benefit, no goal. I'm not trying to solve any problem. It's just nurturing the soul. And that's why I love like nature, hiking, things that are taking me outside. So when I come back, I'm replenished and it's like my balloon has inflated and now I can give more.
Yeah, and it's I like hiking. I don't do it a lot because it takes time. Yeah. But when I'm on a vacation or something, I tend to do it. But like, yeah, exactly. So we love doing that stuff when we're out of town, I guess you say. And but that's where surfing comes in. I live 5 minutes from the beach. And it's like, go get in the ocean, whether the waves are good or not. If it's sunny out and there's dolphins, it just kind of sets me at peace and go, man, I live here,
100%. And it's meditative. You have to be ultra present on a surfboard. You can't be anywhere else. You're not checking emails. You're not thinking about the deal. You're connected with something bigger than you, the waves, whatever you want to call it. And so that to me is so important because when you come back from surfing, do you feel better or worse?
Not really, yeah. Yeah, but even then it's like, I had that like a couple weeks ago when I surfed, and then I got in the hot tub when I said I'm not going to the office at 10 a.m. And the girlfriend's like, why are you in the hot tub? I just felt like going in the hot tub at 10 a.m. I don't need a reason. Yeah, so it was fun, but it's like the waves weren't good. But I'm like, man, I had fun with 2 of my friends. Came home, I sat in the hot tub, and then went to lunch, and then worked a little bit. I'm like, this is the life again, So I think it's really important. Well, let's end on. I like to ask every guest, what are 2 books that you can recommend to listeners? Because there's always a lot. But that's why I asked for 2 that maybe the listeners that made an impact for you that you'd recommend reading.
So I have so many. Well, first of all, traction we talked about. As a CEO and founder, I had no model. I didn't know what I was doing. You don't know what you don't know. I didn't understand how to run a company and how to put the right people in the right chairs and how to encourage people to lean into what they're already good at. So for sure, if you're a business owner and you have at least one employee, you have to get traction. And the second one, I know like it's kind of all over the media right now, but buy back your time. Shout out to Dan Martell. You know, I am big on that top right quadrant of like what lights me up, what am I really good at, and what makes me the most money. And then that bottom left quadrant, what can I delegate to free up my time so that I can be a better leader and family member and all those things. So if I got to pick two, it's those two right now.
And those are two top of my list as well. And I will say this, for any listener that's like, hey, I don't own a business, buy back your time can also be used, like Dan talks about using it as a house manager. So I got a lot out of it, and I was incorporating a lot already. It's like, man, when I was younger, I used to mow my own lawn. There's no way, and it's not that I'm above it. It's my landscapers are $80 a month. They come every other week. My cleaner is pretty cheap, right? And so certain things, like I'm talking about getting a house manager someday, and I'm not talking full time. I'm talking someone that just 10 hours a week helps get groceries, goes over stock, analyzes like, did the air conditioning get serviced at the couple houses you have? And it's the little things.
100%. And even like you said, even if you're a single parent, that book's going to help you because it's going to free up your time to do more things. And you can, like you said earlier, your 9 to 5, it lets you work on your 5 to 9. Now I can get my side hustle going. Now I can show up more for my kids or my family members or whatever. So anybody could benefit from that book.
Yeah, Dan's got a lot of great content. So if you're listening, if you don't know Dan Martell, I think YouTube's his best spot. I mean, you can find him on Instagram. He's blown up, but I met him. We hosted him here for an event. He's just a great all-around guy, in my opinion. Very busy, but a very great guy with great message. So highly recommend him. I think Gene wrote Traction, right? Hackman, yeah. So those are two great books. I've read both of them. I've read Buy Back Your Time a couple times. It's kind of maybe my annual read now or listen to remind you of what you can put into place. And I think that book also tells you spend your time where it needs to be spent. And some of that I took out of that, like I need to go surfing. I need to connect with people and play golf. I'm not even a big golfer. It's more just I need to relax, get out in the sun, whether I walk or drive the course, and just like have a peaceful hour or a couple hours.
Well, to piggyback on that, it's not a book, but it's called the Big Ass Calendar. Have you heard of this thing? Yeah. Jesse, that's right. Yeah, exactly. So shout out to Jesse. And like what it did, and anybody that doesn't know, it puts your whole year in front of you. And I didn't realize how little I was forcing myself to do these things. Concerts, big trips, birthdays, events, all these things that like you kind of fit in when you want to versus being intentional about them and actually planning them out and seeing it in front of me. Dude, I was like not living life the way I should have been living life.
It's pretty cool. I haven't
Like,
bought one yet.
dude, you gotta get, because when you see it in front of you, it's shocking. I was like, wow, I am not doing anywhere near enough for those other things. So
yeah, I may have to buy one. We have a monthly one on the fridge just to keep track of things, and it is cool to watch. And I can see my kids' events and whatever we got going. But I think I might have to put one in my office.
game changer for me. Like that was $50, best $50 I've spent this year without question, because it comes with activities too, and it kind of gives you suggestions and how to do it. And it was just that structure I was missing of, oh my God, I'm not doing any of this shit.
And I believe his philosophy is put the family vacations and functions that you want to do first, and then let work evolve around that.
That's exactly right. And it's one big trip a year and 4 little trips a year, non-negotiable. And I was like, yeah.
I love that. I actually love that. So you know what I'll do? I'll put the link to that calendar in the notes of the show. I'm going to order one today because or else I'll forget. I want to put one up in my office. So where can people find you if they want to learn more and follow you along?
Thanks. So most active on Instagram, the Evan Rundle. DM me. I work with everybody, whether you're a realtor, broker, developer, investor, architect, designer. I'll talk to you. I'll see how I can add value, and we like to partner with anybody.
I love it. Well, thanks for coming on the show and spending the time. It was a great convo. Looking forward to more and seeing your project in San Diego at some point. And all right, guys, thanks for listening. Hope you got a lot out of this show. I know I got a lot, and I'm going to look at building a luxury unit, STR, in my Oceanside property. And so excited for that. All right, we'll see ya. Thanks.